Hello and welcome back. Are you ready to be amazed by some real estate statistics? I'm going to get into some pretty interesting numbers this week. And I'm also going to read some comments from the latest video I did to see what you guys have to say. So starting off, we'll get into this first chart here. This is the housing inventory Canada versus USA back to about 2016 or so. And I'm bringing this up just to show that Canada is no different. Canada's not special. I hear it all the time. Canada's special. We got all these immigrants. This time's going to be different, whatever the case may be. It isn't special. The USA are following the same trends when it comes to inventory. So here in the red is the Canadian inventory and the USA in the blue. So first of all, I'm going to clean this up a bit. I'm going to remove that big spike from the Canadian data because we track months of inventory where the States doesn't. So when COVID started, they didn't have that big spike because they're just tracking active listings. So here it is, the same data, just April and May 2020 in Canada removed. And you can see, look, it's the exact same trend here. Inventory was higher pre-COVID. Of course, it crashed. It bottomed out in 2022. And then it has been increasing since in both Canada and the US. So pretty interesting to see we're actually on the same trend. And it's because we're in the same kind of global marketplace now where everybody reduced rates and then the increased rates. And of course, that's going to bring inventory back because it's taken away people's purchasing power. Now, although our inventory are following the similar trends or the same trend, the statements and the sentiment from the central banks is a lot different. They're focusing on different aspects. In the States, they seem to have a more robust and diverse economy to deal with, where in Canada, we're dealing with just real estate. Real estate is such a huge part of our GDP, so there's a lot of focus on that. And here is the press release from the Federal Reserve when they dropped their interest rates 0.5%. And I'm not going to read through it, but it talks about all different things in the economy and the labor force and all kinds of different things. Now, when we look at the Bank of Canada's reasoning for reducing the interest rates here, it's a different story. A lot of focus on housing. Here is the summary of the Governing Council deliberations from their September 4th decision to drop it another 25 basis points. And I went through and did a keyword search for housing and shelter and things like that. And it came up in almost every paragraph. So housing is top of mind when it comes to the decisions in Canada. And other people will tell you, no, it's not unemployment, but housing is, you'll see here. They start off with the international economy and they start off referencing the United States. In the United States, growth was higher than expected in July, mainly due to strength in consumption. The successive upside surprises in household spending were puzzling, particularly as the labor market had begun to slow. Members suggested that net wealth effects from strong equity markets and the fact that existing mortgage holders had locked in low mortgage rates could be supporting consumption. So, of course, in the States, they have locked in 30-year mortgage rates as opposed to our 5-year terms in Canada. Now we get into the Canadian economic outlook here in their report, and you can see all the times that housing and residential and mortgages comes up here. I'll just browse through them here or breeze through them real quickly. Household spending was weaker than anticipated in the second quarter. Overall consumption growth had slowed to 0.6% per capita. Consumption had contracted by 2.4%, while population growth remained strong. Residential investment had also decreased in the quarter, with large declines in renovations and new construction. Members discussed whether weakness in consumption and housing could be due in part to caution on the part of households. The household savings rate remained well above pre-pandemic levels, suggesting consumers could be waiting for lower interest rates to make large purchases or to enter the housing market, or they were saving in preparation for higher mortgage payments at renewal. So 1/3 of that outlook was geared just towards housing and household spending and mortgages and whatnot. Moving on to considerations for monetary policy. Again, household, housing, shelter, all pops up. 2 of the paragraphs here. Regarding the forces holding up inflation, members expressed confidence that things were evolving largely as expected. Shelter price inflation, which remained too high, had begun to slow. The risk that it would rise had diminished, and a strong rebound in the housing market had not yet materialized, and affordability constraints remained. Nevertheless, members observed that the housing market could still pick up more quickly than expected. Inflation in prices for services, excluding shelter, had also eased slightly in July, a sign of diminished risk and that these price pressures would persist. On to the next paragraph. On the other side, excess supply in the economy continued to put downward pressure on inflation. Household spending and residential investment were weak, and the labor market had softened further. Members discussed the balance of risks to the outlook for inflation. Some members took the view that the risks were balanced, with strength in shelter and service price inflation offsetting the downward pressure from excess supply. Now moving down to the 2 bullet points here. Lower interest rates could spur economic activity, and the economy could rebound faster than anticipated in the latter half of 2024 into 2025. The housing market could strengthen, quickly boosting house prices and shelter price inflation, and so on. The economy and labor market may not pick up as anticipated or may even weaken further if consumption and residential investment do not strengthen as expected. So as you can see, the majority of that latest interest rate decision has a lot of focus on housing and shelter. It just goes to show you that we have such a large part of our GDP tied up in housing and shelter that it is top of mind when the central bank is making these decisions. Next, I want to move on to perspective. It's all about perspective, and I want to put something into perspective when it comes to house prices and how outrageous they are. This is pretty crazy, so check out these charts here. I'm using the Greater Golden Horseshoe, and this is from the Toronto Real Estate Board. This is as much data as I can get, the widest area that the Toronto Real Estate Board provides for data. I can't use the national data because it doesn't go back as far. It only goes back to like '05 or something, but I will be using that right after. But I want to go through this first. So here is the average sales price for the Greater Golden Horseshoe, and of course it was down around 250, and then it's up to $1 million. And of course, we all know, we've seen this chart time and time again. It looks like a stock market chart. Now I'm going to add a little perspective into this chart. So in 1989, our house prices reached a peak. 6 years later, they continued to decline. There was 6 years of declines. $80,000, the average house price declined in this area. And it went from 1989 October to October 1995. A lot of money. It was a lot of worth or net worth at that point in time. Now, just to show you on the right-hand side how completely insane our real estate market is nowadays, we have that same 6-year movement in prices in 1 month, time after time. There you have it. $75,000 it went up in 1 month from December 2021 to January 2022. Another $84,000 it went up, more than it moved in 6 years in 1989. In 1 month, it went up from January 22nd or January 2022 to February 2022. Then on the downside, same thing. It went down $92,000 in 2 months from February to April 2022. It went down $62,000 in 1 month from June 2022 to July 2022. So we're having these massive movements that we see over 5-6 years in the past. We're seeing these in 1 month. So again, it just shows you how volatile the market is. I know that was old news. 1989, prices were so low. Let's move on to the Great Financial Recession or Crisis, whatever it was called, in '08. In '08, our prices in this region dropped $52,000 in 8 months from April '08 to January '09. I compared it to now. There was 9 separate months in the 2022 to current period in 2 years that the prices have moved $52,000 plus, either up or down. $52,000 price swings was the whole great financial crisis in Canada, or in Ontario in this case, that these prices move. And we've done that 9 times. We do this like every few months. We move the amount that the great financial crisis did in '08. And that wasn't that long ago. Here's a little more perspective. This gets pretty extreme. 10-year period from January 2000 to January 2010, 174,000 prices increased over that 10-year period. We almost saw the same price movement in just 2 months from January 2021 to February 2022. 10-year cycle we saw in 2 months, which is insane. In the 6 months from August 21st to February 22nd, we saw a $245,000 increase, way higher than a 10-year cycle in just 6 months. Completely insane. This is like perspective. You have to look at this, right? Then on the downside, 253,000 we went down in 5 months. Again, putting that 10-year period to shame, like way higher. What's that? 75,000 plus more in movement than a 10-year period in just 5 months from February 2022 to July 2022. Looking here, we had a $180,000 drop in 4 months in 2017 from April to August 2017, more than a 10-year period. Again, insane. Now I want to use the same data and show you how extreme it is on the national level, which again, just as extreme, but I can't go back as far because we don't have the data. But let's check it out here. On a national level, in the 2008 financial crisis, the average home in Canada lost $43,000 in 8 months from May '08 to January '09. And there on the right is the months that had $40,000 plus price changes from 2020 to 2023. Luckily, now we're not seeing those 40 plus $1,000. We're seeing under 30,000. So the market, the volatility is starting to come out of the market, which is a good thing. This next comparison is just insane. So check this one out. 15 years from January 2005 to January 2020, just before COVID. 15-year bull run. This was a bull run. This wasn't like a flat prices. This was like considered one of the biggest bull runs and continuing on now, but in Canadian real estate history, $276,000, the average price in Canada increased. And look, in just 2 years and 1 month, we did higher than that. We did 310,000 from January 2020 to February 2022. In just 11 months, we dropped $205,000, not far off of that 15-year bull run in 11 months from February 2022 to January 2023. So we're seeing this decade plus movement in a short period of time, which again is just insane. It just really puts it into perspective how crazy and insane our prices have become and how much they need to correct to bring us back to reality. All right, so I love when you guys comment. I read them, I browse through them all. I don't respond to them all. There's too many of them, but I am going to go through them regularly now and read kind of the ones that stand out to me. I have replied to some that were really great comments too, but I just have a selection here. And yeah, we'll see what you guys have to say here. From Yash, John, the funniest thing I hear from realtors is them confidently saying, first-time home buyers are waiting for more cuts before they jump back on the market. As a first-time home buyer, I have never been asked what is stopping me from getting in the market by these so-called professionals. In my opinion, interest rates of 2 or 4% does not affect my purchase as much as these crazy prices. And that's a great point. People need to focus on the prices, not on the payment or not on the interest rates, because that's what gets the market in trouble. You have to look at the overall price. From Benoit Levesque, a mobile home is pushing $400,000 in the Montreal suburbs. Not sustainable. I agree. In my region, we have mobile homes for over $500,000. I don't know if they're still that price, but they were well over $500,000 at the peak. I'm guessing they're still 400 and something. From Elevate Vision Digital, I work with a couple different people who are landlords with multiple properties in Alberta, and they say prices are going to skyrocket with rate drops. We'll have to wait and see. You should ask those landlords what data they have to back this up, or is this just an opinion based on like a speculative feeling? From Cooper69, I think your name is. These names are hard to read, so I might not keep reading the names. People need to understand over the last few years, the central banks around the world raised rates faster than any time in history. Let that sink in. If you think assets such as real estate are not going into a price recession over the coming years, you're not paying attention to macro fundamentals. Thanks for the updates, John. Great point. From Clay Arnall, you claim that many people said that prices will take off. Who's been saying that exactly? Everywhere I look, people seem to be saying the opposite. And someone replied, everywhere I look, it's exactly the opposite of what you see. Everyone is saying the market is going to boom and go crazy all over again due to rate cuts and liberal moves. I guess I could pay attention and list the people, but I try not to name names. But just today, I was driving to pick up my son, and I heard a local realtor, a radio ad from a local realtor, and the message was this: if you're looking to buy, now's a great time. Interest rates are softening, and as they continue to soften, there'll be more competition. So you should buy now. And this is exactly what the message said on the radio. So yes, this is happening. There's many realtors. I talk to them all the time, and I just turn the other way. I don't sit there and debate with them, but they say, and they've been trained to say this. They don't have data to back it up, but it's just an opinion, right? Friend from North Bay, Ontario tells me that it is active up there as many are moving out of Toronto and buying for less there. Is this something your stats show as well? So North Bay, I don't think is in my statistics. It's just too small of an area to include. It might be in the greater, like average price statistics, but it wouldn't really affect things that much. But we see many people move from bigger cities to these smaller towns. That's a little too far, in my opinion, if you're looking to relocate just to live. A lot of people would move up there to retire, semi-retire, or do something like that. But I think they're going to find themselves a little too far out, in my opinion. But I guess we'll have to see. Hi, John. I would love your thoughts on what you think the market will do come 2025 once the mortgage rules start for the first-time home buyers. I'm wondering if the only bottom we'll reach is now, and 2025 will heat up because government doesn't let housing cool off. However, I'm not sure how a first-time homebuyer population can carry the load of depleted economy with higher unemployment and recession indicators. Signed, confused, first-time homebuyer. And I think you just answered your own question. The government obviously doesn't want to let anything crash. They don't care if it's good for you or first-time homebuyers or not. But at the same time, who's going to want to buy into the market and who's going to be able to pay their mortgage when unemployment is up and a recession is here? So yeah, these are the forces that are fighting against each other. And this is part of the trends we see, the historical trends, and part of my home buying recipe that, yeah, we're going to see buyers are always going to get into the market, but as this fear comes into the market, recessions and unemployment, there'll be less and less, and that's when things are going to get really intense. So, yeah, you have to be very careful. Make sure you have a good paying job and you're in it for the long run. But again, if you're going to try to squeak in and overpay for a house, it's not advisable at this point. Houses have no upside at the moment, too much risk and low return. So, from an investment standpoint, you're 100% correct. PD 5482. This is fake news. This clown isn't objective. He's permanently bearish. Must be his shtick. And then Johnny Longstocking 183. I don't know. This guy comments on my videos every week. I don't even think he watches them. So if you're watching this, let me know if you saw it, Johnny, because I don't think you do. He will still be claiming the market is about to crash next year when prices are rising. You get a big X. Moving on. M. Howe. People know interest rate will go down even more. So why would anyone buy now? People will start buying when they realize rate cut cycle is done, probably end of next year or so. And that's a great point. Nobody thinks about this. Everyone thinks, well, the rates go down, get in before people buy and the prices go back up. Many people are in that same boat. Why would you buy now when next year you can get an extra 1% off your interest rate? So yeah, that's a great point. And lastly, from Mark Fox, the baby boomers have a lot of their wealth tied up in their large detached home. They will need to extract money to pay for long-term care, and long-term care is insanely expensive. That is a baked-in crisis that will be an epic event. And that is a very legitimate point. I deal with a lot of people, and Canada does have an aging population. So I have many sellers that whether it's their parents' house or it's their own house, they need as much money as they can to get into that long-term care home. And this is why this inflationary period, it affects everybody. You think that, yeah, they bought their house for $50,000 back in 1960 something, and it's worth, $700,000-800,000 now. That money gets eaten up pretty quick, especially when they have it in an investment portfolio and the market turns. So that is a crisis waiting to happen. And I hope for the sake of those old people, it goes in their favor, but I guess we'll see. Anyway, that's it for this week, and I'll see you next time.